Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino, still here, still kicking, even with the sell-off, still going. There's been some great shorting opportunities. Let's see, Kalani, thank you for the super chat. Welcome, welcome, welcome. Wow, haha, very funny. What's up, Mike? I mean, what's going down, Mike? You got me hooked on shorting, and I like it. Uh-oh. Uh-oh, Kalani's hooked on shorting. Well, in these kind of markets, you gotta learn to do some shorting. Hello, hello. And if you don't short, like if you're in stocks, you can always play the inverse ETFs or some inverse stuff. I'd stay away from the double and triple inverse for the most part, unless they're really quick day trades. Who keeps killing off the market? Well, the market has been on a tear, and now we're in distribution and rolling over. So, we have what, 7% inflation. We're going to get rate hikes. We're probably going to go into a massive slowdown. So, I mean, we've had a massive shift into gold today, and that was institutional. Looks like the Nasdaq hits the 200-day overnighter tomorrow. Yep. Yeah, we'll start looking at that charts in a second. Another technical correction for the Nas. The markets are just weak, which means we will get one of those rallies coming up soon, but the rallies over, I'm not just talking one day, are still to be sold based off this price action. I feel bad shorting sometimes, like someone is losing money. Again, you don't, it's part of trading, especially in the futures. I mean, the futures are a zero sum game. So you short like some micro E minis or just the E-mini, I mean, micro S&Ps or the mini S&Ps, or the same with the NAS. It's a zero-sum game in the futures department. That's just the way it works. And shorting's a valuable thing well, even in stocks, I find it very valuable because a lot of the major short selling firms, it's a very tough job to be a short selling firm, and they uncover a lot of the malfeasance and fraud out there. So I really applaud a lot of the short sellers who really do their due diligence and have uncovered, like, there was massive short selling a wild card for a long time, and those guys were taken to the shed multiple times until it showed that Wirecard was a fraud. Thank you, Shashi. Super chat. What a day. What a day. What a day. Everybody's getting really bearish, though. I like this because that means I'm going to start watching even more for the bounce. Hey, Raj. Hi, how are you? Thank you, as always, for your contributions. Rich Beast. End of the world coming. Russia will invade Ukraine and the USA will launch nuclear missiles all over the world. Uh, Russia may invade Ukraine, but I doubt that will be a nuclear response. I know you're kidding, and I would not want that. Period. Ever. That would really put a damper on the markets, wouldn't it? But it wouldn't matter if you made money on the short side then, because it would be all over. My Amazon puts that would be made MADE, not MAID. Unless your made MAID is cleaning up in the markets. And your puts may have cleaned up in the markets today. So thank you, Abraham, as always, for being here. Thank you again. We had just recap because these super chats help keep this channel going from the sense that, it's free content. It takes my time, and my time is worth something. You may think very little, but a $5 super chat does help, and we got a rounded up $5 super chat from Kalani. So thank you, Kalani and Shashi, again. Uh, I'm glad you found that funny. I will short as long as it's viable. And, there are times for shorts, there are times for longs, and there's time for bull markets, and there's time for bear markets. It's all just part of trading. There are times to take stops. There's time to take profits. That's the way it gets. Let's just take a quick look. I'm trying to do more. We're in earnings seasons now. So unless I have a major objection, you know, Well, before I get into that, I have to just go back to, please do consider subscribing, ringing the bell, and hitting that like or dislike button. You can always dislike it, especially if the market is dropping. I do not mind dislikes. I like dislikes because it means I said something that probably hit a nerve. Not that I try to do that, but let's see now. Now we got that out of the way. We've got everything out of the way. I can sort of look at my multi-monitor setup. That's why I have multiple cameras on here, because I have to shift between monitors. Yeah, we'll look at the Russell too, Rich. We will look at the Russell. Russell's at another key location. After earnings and after the close, we're not going to necessarily go through these, but Alcoa, United Airlines are a couple bigger ones. Watching Discover, just because of the credit sector and with possibly slowing purchases, but more people could be carrying things longer on their credit cards. But holiday spending was down, so it'll be interesting. Oh, we got some more banks in here. So let me know in the chat if you want to look at anything after. Those are after today, after hours, of course. And then tomorrow morning, again, as I said before, Earnings Whispers, I just love their charts. I do not have any affiliation. They do not sponsor me or pay me. I just think they put together some excellent charts, and I love these little overviews. If you want a quick glance, I don't agree with all their technical stuff they always do, but I can easily see where stuff's trading and peek in on it. Now, tomorrow morning, American Airlines, definitely going to check that one out. Union Pacific, definitely checking that out. And let's see if there's anything else. Those are the two major ones I'm going to be looking at. Besides, I'll glance at some of the other banks. Sell off today. Here is our heat map. Here's our heat map. Going to put this up more and more often. This is from FinViz. By the way, we do subscribe to FinViz. You can see Apple. You can see besides Microsoft, and that has more to do with the Activision acquisition. But then you see, look at this red and we'll take a look at the SMH. Please remind me SMH, but look at this right in here. Here, remember we've talked about consumer staples / consumer defensive. They're pretty much one and the same. You have a lot of money still rotating into there. Procter & Gamble, Walmart, Costco, Target, a little bounce, Dollar General, Coke and Pepsi both up. We've talked about that recently. It's handy for a quick glance to look at the heat map overall. So here's your BAC had earnings today. So the banks were under some pressure today also. Let's see though. Still looking for longer term plays in the bank. So that's where these heat maps are very, very handy. Netflix bucking the trend a bit. Disney, part of the portfolio, is off a bit. Also part of Nancy Pelosi's portfolio. Verizon and Verizon up a bit. AT&T flat, you have everything, and T-Mobile down, but you have everything with that 5G and the airlines going on there. So let's see here. Let me see. These markets that close right near or at the lows, very, very bearish. I'm still definitely oversold on the RSI. I'm going to take a quick look at something. Where's my moving average exponential? Oops. I didn't want two of them. I want one of them. I just want to, this is one I glance at occasionally. It's not normally on the chart. I just want to check out where we sit with it. What color? We'll make this purple. Purple. I'm just checking where the 100 is because that's been attracting little areas of, we had the last little dip there. We've had some major key dips there. So I'm just seeing where it is in relationship to them. We have a lot of dips that haven't broken that, but we are now below the 100 EMA. So just going to keep an eye on that for the next couple days. Overall, slicing through very end of the day, this 45.29 harmonic, next harmonic cluster for the S&P. Let me get my little label up there. Is 45.01 to about 44.99. So that's very key with these lows from December. I would be shocked if we, it's the market, so we have to trade what is. I would, and this is just my perspective, I would be shocked if we get a close below that level into this clear path without a bounce first. It can happen, but it would be shocking. I put in the Discord earlier today, I was watching for a potential little capitulation low with the European session. We'll take a look at that in a bit. But then we rallied up to the trend line and then rolled over. And I said if we got below today's low, then it was a kiss to trend line goodbye. And it turned into it. And that was the low prior with the European session. And then it was just shorts all the way besides one little long bounce trade. But 4,500, besides being that round number, we have a dual cluster there. If it slices through there on even more weakness, 44.67. Your key area for a closing basis, though, is about 40. I'm watching, see this close from December 1st. That is a very critical level. That's the low close from this move. And the lows are important from that level, but the close is 45.0850. So especially tomorrow, if the selling continues, I'm watching to see if we close above or above that means I'm watching it even more aggressively for a short-term bottom unless we have a rip through your face off rally tomorrow. But below that, that would be really not good. It is oversold, though. Doesn't mean the selling can't continue. Just as we can remain overbought for a very long time. Just raise this up to, I forget not, I'm expecting highs anytime soon. Let's get to the shorter term charts. There was a nice little double. There was this double bottom play. I'll just show you what the a couple of the plays today. So we had the selling pressure off the open. Nice little divergence down here, higher, low in the RSI after coming into oversold. This was a little double bottom play. Here it is with all three targets hit, coming back also to the prior support that was broken on the open, turning over to resistance. Just wanted to review these to show people that there are still long and short trading opportunities. Then we had this double top pattern. And then everything else was just, we had a nice little flag pattern here. That was just once this double top, and then we broke below today's low. That was the kiss the trend line goodbye, especially down here. But we had this little flag pattern in bearish markets. That was right here. Oops. Why do I do that? I rapidly do this. That was the little flag pattern right there. Resumption of trend, little pause bar right there, couldn't get any retracement, and then just complete selling into, and you see, into the close. Just very bearish. Let's see what some comments are before I keep going. I love the flush from the 20 MA. Markets pricing for U.S. to go to Ukraine. We'll have to see how that plays out. I don't have an opinion yet on how that's going to go with the markets. I actually think it could be bullish, unfortunately. Wavy senses a big bounce coming. Everyone is so bearish they will blow some shorts out the water. And normally, I do think we're going to get a bounce coming. And that will be, we have a still potential. Just check something here. Nope. No. We used to have a potential double bottom, but it's now invalid. By the way, this is not another double top. The only problem is there's not a lot of short interest. There is some very localized short interest, but there's not a lot of broad short interest in the overall markets. Now, a short squeeze, if we're going to get something from the lows, especially there's getting to be some heavier shorts in some of the questionable profitable tech stuff and unprofitable tech stuff. So we could see which, that will get, could be at least a short-term rally in the Nasdaq if we start getting a short squeeze in that stuff. But a sustainable 3 or 4 day short squeeze I do not see right now, because there's not a lot of short pressure. And the shorts have been so vilified, and it's so low because, again, longer term, we've been in this major market and it has not paid to short. Now, there will be some more shorts starting to come in, especially after the next bounce, but we don't have a ton of shorts compared to historical. And people love to vilify the shorts. You should love the shorts, especially in bear markets, because it's one of the things that creates the counter trend rallies. A lot of the major big rallies are done by short squeezes. So we have no potential double here. I will still be paying attention. My bullish line in the sand now is up to here tomorrow, but that doesn't mean you can't get bullish before, especially if we get some momentum bars. But right here, so you see, we had this level from the 10th. We move up, and then, breaking below it, that today retesting that level with the rotation zone. Why I'm really watching this is the rotation zone on the 4 hour would be out of the way if we can trade above there. Now, if we continue to push lower, I'm watching for another reversal play in the European session, but that next key harmonics around that 4,500. And even if we push down there, we could get a really nice 4 hour divergence setting up. And then I watch for a shorter term play. Now, aggressively, they're on a 4 hour close above this bar, which the high, there's a very aggressive, is 45.7325. You need on a closing basis, that would be a very aggressive play to the long side, but there is that potential. And based off the daily, there is an aggressive buy above this 4,600 on a closing basis. Again, very aggressive to the upside, but have to list them out. I also want to see with this level, and then 46.1375 will be another area. But why I say these are so aggressive, because even to the upside, you're slamming into the declining rotation zone. And weekly, it'll be interesting to see where this week closes. It's Wednesday so far. The weekly rotation zone's back at 45.66, so it'll be interesting to see if it can eke out a rally to the end of the week to just still close potentially bullish, although that bullish area is getting very, very weak and the daily is bearish. That's really about it. Before then, I mean, everything else is going to just depend on the European session for me to watch, even for some other potential long entries besides what I listed. Let's see. Let me switch over to Nasdaq, and then we'll take a look at some more comments. Nasdaq, there it is. Let's see. Nasdaq, S&P 500 below the 20 MA up on a weekly chart. We just took a look at that, and here it is here's the Nasdaq too. So the Nasdaq, I mean, it would take a massive rally, but the Nasdaq will probably be closing in neutral territory with everything else being bearish, unless we had a massive rally. And then it looks, even with a rally longer term, it looks like it's going to roll over to a longer term sell signal in the Nasdaq. So already it's bearish on the daily. Nasdaq coming down at a 15,027 harmonic. You can see the 200 daily simple moving average with the next cluster area about 14,970 to about 14,990. So there's pretty key support in here. Again, there was this mini double with a divergence right there, but that was just a quick little long trade. And then rolling over, another little flag pattern here, and selling just pressure into the close. Bullish area for tomorrow, I'm pretty much leaving it the same. Now, I might do a little, if it can actually get a bounce to get above 15,200. 15,195, 15,200, might be interested in a little quick scalpy long play if we get some decent momentum bars. But on continued selling, again, you have this 14,962 below there. By the way, we still do have a potential double bottom. This still does qualify. First and second targets. Third target is beyond the move that started, but first and second targets are in it, and I can tell you already this one still qualifies. But it would need at least a 1 hour close above 15,372 unless we had massive rip your face off momentum, and then would be aggressive play, especially a break and a retest on a shorter term time frame. That's the only major the major pattern I have on the Nasdaq. Besides, we could be forming also a divergence. So we're definitely running out of downside momentum. That does not mean the downside can't continue. That's just why you don't. I keep asking this question. Well, if you have a potential divergence, why don't you just buy here? Because we could still go down. I mean, we could still break these key levels. We could still have a massive move down. Remember, we closed yesterday into the clear path move, and the next major target for that is 14,883 or 14,885. Market crashing, this is not anywhere near a crash. This is just a slow deflation of a lot of very long-term overbought. I mean, you got to always keep this in perspective. Here's your monthly chart. Look at this monthly chart. Look how few pauses there were. I mean, this was the COVID stuff. And then look, you had a little one here, but then look at this move. And we're just back to the monthly top of the monthly rotation zone. And this could easily, on a longer term correction, get back down to 13,500 without even putting a dent in the longer term. Now, it'll freak people out because people have been so conditioned to this, but that barely puts a long-term dent in things. All right. I mean, there's your 1 month. What would hold on. I didn't mean to do that. 12 minute. I don't want a 12 minute. I don't want 12. Yeah, months. There we go. I want to see what it looks like. Look at this. This is essentially a year chart. Look at this. That is complete vertical, and I'm not saying we have to get down to back to this 10,000 level, but put this into perspective. Look at this. One red year out of since 09, one red year. That's why I'm not freaking out, but there's just trades. But for people who can only trade to the bullish side, it can be very challenging. Now, even on these rallies, if we do get that short-term low, it would, key resistance is now 15,500. We're declining daily rotation zone. So please keep that in. Sorry, I didn't switch the title. Please keep that in mind even on this rally. So any of these buy signals are very aggressive because you have to raise your stop. We could easily come back here or even higher. You could even complete the first and second target on this double and be just in the daily rotation zone back against this key resistance and then roll over. So these signals aren't to be something, oh, we're going to all-time highs. No, these are signals to really just watch for a bounce play. If we did drop below this 15,965 area, the next target is 14,886. Below there is 14,775. If we get below the 200, though, my major focus is this 14,885, 886 level. Dow, then the Russell. Dow is interesting today. I put in Discord key area also. I know maybe I didn't put this in Discord. I mentioned this yesterday on the live stream. Sorry about that. Is this we had the harmonic, we have this prior significant level, and we have the 200 and the trend line all right here. And you can see that's a trend line that from back at the October of last year's lows to the December of this year. Now testing that area. I can take this other one off. So a lot of markets are at very key levels. Let's just take a look at that weekly. Now the Dow is so far in neutral mode. It would have to get back above 35,300 to end the week just slightly in bullish, but still there is a potential. Yeah, nope, that's done. We got a lot of stuff that's done. No potential double in here. There was just this little trade earlier. And again, another little mini bullish trade coming up to hit all the targets plus my bullish line in the sand and then just rolling over. So, and I'll go to the Nasdaq and S&P first to look for trades there. But no double top here because it wasn't reversing enough of a move. Again, very critical juncture. Bullish line in the sand for me. This has to really prove itself. 35,400. We break down below this trend line area tomorrow. 34,711, right where these candle body lows are. I'm going to bump this level down since we've already hit that. But this would be my major support zone for tomorrow. That's really about it. I don't need to dwell on the Dow here, but that's going to be key. And right now it's going to be interesting because Dow's right at the 200. Doesn't mean we can't slice through it, but if we do slice through it, if we don't get the reaction within a day, it's in trouble. Now, tomorrow, that's again why I'm looking to see if we're going to get some major dip buyers step in tomorrow with where the Nasdaq is and where the Dow is. So that's that. Let's see. It's a continued slow and controlled sell-off by big whales. I mean, we have major rotation going on still, out of tech, out of high-flying names. The high-flyer PE ratios are starting to get deflated in anticipation with, you have inflation that's even if it drops a bit, it's not going away anytime soon, and that really hits PE ratios hard because companies can only pass along a certain amount of stuff and cost. They have to eat some of it, else consumers just stop buying. And we're already getting a slowdown with the consumer again. We're going to be in very interesting times. This is the most interesting it's been since the end of 07, beginning of 08 to me. There was a little blip that was very interesting in 11, but since then, this is the most interesting time. After the indices overview, I will take a look at ARC. Let me first get to the Russell. I said that too. We don't normally do the Russell every day, but the Russell, look at this, next significant level, 2060, boom. We actually closed 2060.5. Again, this is why we can watch for a potential bounce. Doesn't mean, again, if you're watching, you need some momentum bars. So start watching for momentum bars, and those are only for bounce plays. This is getting to a major line of sand because after this, you're in this little clear path move. I'll mark off the next little key areas, but this is minor. Next minor area is 2004. 2000 to 2004. Then we're down to right around 1945, and then you get below there. Woof. Then it's really whoosh. So your key area that I'm really focused on any rally in the Russell, we remember this line in the sand we covered, it was yesterday. Touch, no, and when I say touch, I'm looking for closes below. You see, this was the first close below yesterday. So this level is now major support becoming major resistance. And I'm not saying you can't spike above it. We have the rotation zone just above it, but that's where I'll be watching for to Russell on any rally on a closing basis. ARC. Oh, poor Kathy. Poor Kathy. Again, we got the close below the major 62.5, and that was from the run-up lows back in March of 20 to the highs. Boy, those highs are so long ago. February of last year, I mean, this is going to look at, this is going on, I mean, 11 months at this point. And look at this performance over nearly the last year. And this is just, even with rallies in this, they're just selling. This is in trouble. I think, again, we've already talked about that. That's going to have to be consolidated, her funds at some point. And any rallies, it's just watching. If you love shorts, this is a great thing. As long as the market, especially tech and garbage, is just getting hammered, she's in trouble, so it's sell the rallies in this. And I'm not saying this won't rally. Again, we had that rally back to rotation zone, move down lower. And here's your weekly. The weekly, even if it rallied all the way back to 90, it's just another sell setup. It seems that QQQ has gap on daily below the 200 SMA. Let's take a look. You know, I really appreciate everybody who attends these live streams live, because I can't talk to people who don't. But I really appreciate the interaction with this, and people who point stuff out. I'm just letting you know I really appreciate everybody. That's, I guess, what I should have just said in a nutshell. Yeah, Raj, getting the 200, but if we get below about this 364, you have a gap, potential gap fill here for longer term. So it could theoretically fill tomorrow if we just have another horrible day. So keep that in mind for any shorts, or if you're playing inverse ETS with the Qs. Watch for this gap fill, because that is a great longer term target if we just have selling. Now, I'd be targeting that again below this 364 level. What did you want me to look at it? 2018, my first target is 14,400. Now we're back to the Nasdaq, 2018. Well, let me get to the weekly. You're talking about this move, I imagine. This move, the bigger selling move. So that's where you're getting your target from. And yeah, that was a pretty hefty decline, about 7,600 to 6,000. So that was a nice little, so you're basing it off of there. I actually think we could even sell more than that if we get some major selling pressure in here over the next while. So, yep, looking at that, target 160, 170 levels. In what? Target 160, 170 in which one? Is a selling over in ARC K, ARC G? Is a selling over. Let's go back here. Let's take a look at ARC G first. I mean, these are getting very oversold. ARC G is now below the 200. Again, if we get I hate when I say again too many times. If we start getting a NASDAQ rally, I will watch for a bounce. Move above this on a closing basis would be a little bounce play to the daily or weekly rotation zone, daily rotation zone, and the daily rotation zone. So yeah, I will, if the broad market can get a bounce, these can get a bounce in them. But it's nothing I do invest in long term. It would just be a quick little bounce play. It's not even probably worth it from a reward to risk. Just trade something. If we get a bounce in the broad market, which I'm expecting at some point, not necessarily tomorrow. Now that I said that, it'll happen tomorrow. But you've played with something good. Like, what's some good? Not that. Why did I type that? It's Chipotle. No, look at this. I'm actually looking to add this to the portfolio tomorrow. Major selling today. Look at CME holding up really nice. Nice little move up here. You know, it's basing on the top. So something in CME, I'd be looking if we get another bounce, you know, and this continued strength. This is a kind of play holding up with the selling. Buying pressure, we could get a nice continuation play up there. That would be something I'd be looking to do versus this. Why? Because this, fine, you get a bounce, but why would I try to the play would just be to the rotation zone. Well, the play to this is a potential breakout to the upside with a lot higher targets. And you take a look at this on the weekly. Here's why it does. Then again, these, I can't give investment advice. This is for educational purposes only. I'm showing you what I like about it. So you see this prior major resistance level. It popped above it here, but then quick reversal. But then look, test, could not get a close above it. Test here, could not get a close. Finally close above it. Look at all these tests of this with the rising weekly rotation zone. Now holding up. So this, what I also like about this play is you can have a good, decent stop. Is it guaranteed it'll go up? No. Could it roll over? Yeah. But you have a decent stop play and you have upside potential, and it's basing above this prior major resistance becoming support. So I'd be more interested in that than to try to pick a bottom in something else. Just a couple other things. Apple. This is the weekly chart. I am watching this on a weekly basis. Could be triggering the double. The double is now triggered on the daily basis. I like it better on the weekly. So that's why I'm watching this on the weekly. But keep in mind, this is a major topping pattern in Apple. Now, I would not ignore this first target, because it's right where the bottom of the weekly rotation zone is. So that's definitely a stop reduction, but even Apple's triggering some major topping patterns. Not to say it can't get a bounce, but in order to stop out this pattern that's already triggered on the daily, you'd need to get back like above this 170, 750 area at least. Could it happen? Yeah, but that's why I'm also watching it on the weekly for a bigger rollover move. It's also getting into oversold. So Apple is hitting a major sell area. What else? Chips. Oh boy, I just forgot. SMH. SMH. Take a look at SMH. This is weekly only. So I'm going to be watching this going into the end of the week below the weekly rotation zone. And this is a big double top pattern on a weekly basis. And I'd be focused on this 265 target area. So chips could be also putting in, or semis could be putting in. I sound like I'm in England. I'll have some chips. Does anybody like vinegar with their chips? I love vinegar with malt vinegar with my chips or fries. So that's what I'm keeping an eye on too. It no longer feels like a casino and seems like reality has kicked in, and I guarantee we'll get some of those casino moves still. I think Rich is targeting those levels on IWM. Thank you. Can you clarify that, Rich? IWM. Let's see. Here's your IWM. We already looked at the Russell, but your IWM also. There's the weekly. And we already looked at Russell futures, and here's your IWM. So on any rally here, my target out longer term, if you want a great target, if you're especially on after we get another bounce and rollover move, I'm watching about 169 to about 175 as the next major target area, and we do have this gap down there still. But that's longer term, because look at this. This is essentially an advanced clear path move longer term. So I'm just watching, even if we do bounce for another rollover play, and then we don't have a lot of support in here. Sure, Michael. And then I got about 5 or so more minutes in me. Well, let's take a look. Again, you guys are great. Target, we still this actually triggered the double top on a weekly from last week. And remember, we've talked about this. It rallied up today. I'm not very bullish on retail. We do have a double bottom play, which is still valid. It's the targets are slightly different. They have to be brought down to here now. It only triggers above 236.33 on a closing basis. There is no front run to this right now. But you could still complete this and roll over again. But that would have to be triggered first. Longer term, we still have this double top triggered. So I'm watching. That's why I actually have alerts set here. So even on a rally, this could technically rally up to the daily rotation zone and not even even if it traded above this without a close, it could confirm it without triggering for me and then roll back over. So I am not aggressively looking at things like Target right now. Home Depot, again, Home Depot, we had that short. Short just hit the first stop reduction target. I've been watching this one real closely. Bounced yesterday and today just rolling over. Next targets for me, 351 area. And then I am not ignoring the 200 simple 345, but on a spike down basis, that would be on a weekly closing basis. But I will not ignore, let me move this level slightly. See right here, look at that with that final target. I will be watching that though on a weekly closing basis. I am looking for this continued sell-off in Home Depot to watch for buying opportunities. Now it is getting oversold, so would not be surprised to see a bounce, even a gap fill, or even a return up to, this 375, 378 area before if the market's bounced before another rollover. But it couldn't even hold this little support wedge and is horribly weak at the moment. So longer term, there is no bullish play for me. I mean, there's a super aggressive potential buy signal, but that would just be for a gap fill at this point. I'm not even going to list that out. Salt and vinegar chips are the best. You get either some fresh made chips or some fresh fries, and then salt and vinegar on those, even better. But I do like salt and vinegar chips. And Wavy, you're in Toronto. I mean, I remember, when I was growing up in Toronto and when I visited, I never knew. So, little quick side, when growing up in Toronto in my younger years, I go to the little lunch restaurant with my parents, and there'd always be malt vinegar on the table for your chips or fries. And then I moved to the US, and I'm like, you go into a place and I ordered some fries, and I'm like, where's the malt vinegar? And I mean, there's some places that have it now, but way back then in the 70s, people would just look at you sideways, like, what? You want vinegar? Why do you want vinegar? And then they bring out like white vinegar, like I'm gonna have white vinegar on no, malt vinegar. Oh, sorry. Support level for XPEV. Sorry for the little sidetrack. Next support level. Wow, that's a bearish candle. Next support level, let me just see if there's a significant level around here. Ooh. Wow. Next major support's the 200. Abraham. Before that, your minor support, let me bump down some of these levels. Your minor support, I'm just looking to see, yeah, right about there. Right there. Reaction there. Key close, retest there. Becoming support here. and then a retest at that area there, retest there, closing just above there. So that's your next target. 40, 42.67. You get a close below there, then my next target would be the 200 simple. And it looks like you might have a little small gap fill left right at that 200 simple. So that would be my next major target. Looking at both Target, yeah, Michael, Target and HD, they're both definitely, I mean, HD is already at the short in play, and Target's triggered from the short side. So they're both, even on rallies, watching for rollover moves and further lower price action. What's your thoughts about US dollar CAD and crude oil? These are the last two things. Crude is just, we're starting to get that toppy move. I told you yesterday, I'm still watching. Actually, you get a close below today's low. It's not a short signal, but a sell signal to watch for a potential reload area for the bullish. Longer term in crude, I'm still very bullish. It would have to get below about this 79 level again before I'd shift my focus away from the bullish side. Now, it's way overdone. So I'm watching for some kind of pullback. Again, you get a close below today's low, watching for the slightly bigger pullback. Early warning sign tomorrow is about 84.60. You see how this is we had a little pullback right to the rotation zone here, but then rotation, rotation, rotation. We've had 1, 2, 3, and I watch for 3 to 5 rotations, and it's in that 4-hour rotation zone. So this is getting towards the toppy pattern in crude. That just means watching for a reload position. By the way, I'll take a look at US dollar CAD at last, but gold, we had this major move, and this was looked to be more institutional driven. So even on a key area pullback support, and is that now 1835, but gold's starting to get a move on into a clear path move. Next target area is about 1853, and then we're at 1877. Yeah, conservative stop also is about 1813 on this play. Silver, really nice, slicing through the next cluster area at 24. And we've been in this clear path move since essentially this close. So I'm watching for 24.51 and then major 24.73 to the upside. Don't have a pausing bar yet, but I'm just ratcheting these up. And look at the, oops, right around here would be my next major target area. Now let's take a look at the here is your US dollar CAD. You're getting that nice little pause here. I just be watching for this potential double. It's getting slightly, we're getting potentially divergences here. You can't get a close below the 200, but I'd wait. This is definitely to wait for a trigger on this potential double. Because if this does not trigger and you get a move, especially even a close starting below this 200, about 125, I'd target. You start getting close with a decent red bar, and then this will have not held on the closing basis, and I'd be aggressively targeting lower prices. Here's the levels I'd be watching. I want to see what the major swing and the most recent swing are. That's not going to give me, I'm just going to use the major swings. And that's a really nice target right there. So you start as early warning signs of close below this 200. You break below 124.45. Then I'm watching for 123.90 area. You see this little prior major resistance becoming support, which was tested here. So you broke above it, test again. So that is a very key area to the downside. Now you need a close above 125.70 area, and then it trigger the potential buy. Just looking there, yeah, that's a very key level right there. But that's just a buy that I'd watch, especially at that first target for a potential rollover, because now your major support right here has turned into resistance. And that is actually, let me see this. Let me see one thing, then we'll be wrapping this up. So nothing else, because I have to get to the company that shall not be named. I'm just taking a look at this. I hate when I do that. I always forget. I just want to see how this looks. Yeah, the first and second targets in this are still playable. And what's funny enough is even if this double triggered, your major stop area on this would be for this massive head and shoulders, and it's got an upward sloping neckline. Your major stop would have to be a close above this declining. We call this a fail-safe trend line. And look at that first target. It's bounced twice off that first target, so that's very key. Break below that now. I'd actually watch this 123.80 area to about 123.65, especially that 123.65 on a spike low, and then watch this level for a closing basis. And with that, I will have to wrap that up. We need to go to the next session, the company that shall not be named. Yep, thank you for the reminder. So, thank you everyone. I think this was a good session. Feedback always welcome. Let me know if you find just glancing at that heat map helpful, especially in this distribution time of the markets. And if you want me to still put up the before and after earnings notices. And thanks, Wavy. See you in a few minutes. Bye for now.